This is East Asia Tonight.
Good evening, I'm Atelli Edwards. Tonight's top stories from East Asia. CK Hutchison takes Panama to arbitration as Beijing warns the nation could pay a heavy price after its top court ruled against the Hong Kong company operating ports in the Panama Canal. And Japan's Prime Minister Takaichi riding a wave of Sana mania with approval near 80% among young voters. Well, she's banking on her popularity for a strong mandate in Sunday's polls to push through a spending plan for the economy. Now, the gunman convicted of shooting dead former Japanese Prime Minister Shinzo Abe is appealing his life sentence. The case will now move to the Osaka High Court. And Wall Street's worries about AI disrupting software firms spill over into Asia, dragging regional tech stocks lower. Also tonight, we explain the risks in China's private gold trade, highlighted by last week's collapse of a leading platform with little warning. Hong Kong conglomerate CK Hutchison says that it has begun international arbitration proceedings against Panama after the country's top court ruled that a concession allowing its subsidiary to operate the ports was unconstitutional. Well, Panama's Supreme Court annulled Hutchison's key port contracts last week, saying its contracts had a, quote, disproportionate bias in favor of the company through exclusive privileges and tax exemptions. Well, this follows repeated threats from President Donald Trump that the U.S. will seek to reclaim the waterway, which he said was being controlled by China. Hutchison says it strongly disagreed with the court's ruling. Its subsidiary, Panama Ports Company, launched the arbitration under the International Chamber of Commerce, a move analysts say may take years to resolve. Deborah Wong joins us live now from Shenzhen to unpack this all for us. So, Debs, perhaps you could walk us through the details of this arbitration case?
So Hutchison's subsidiary, Panama Ports Company, says it's launched the arbitration proceedings, and it didn't specify the amount of money that is seeking. But what we do know is that the company considers the court's decision to be inconsistent with the legal framework that had allowed it to operate there since 1997. So the company also says that it had already invested some $1.8 billion in tech and infrastructure in the last 30 years. So because of that, it says it reserves the right to commence national and international legal proceedings. Now, the court's decision to annul the licenses could disrupt the company's earlier plans to sell dozens of its ports, including the two Panamanian terminals. Now, it's unclear what this latest development will mean for that current business deal. But, in terms of the port operations, what we do know is that authorities are intervening at this point. The Panama Maritime Authority says that Danish firm Maersk will temporarily take over operations of the two ports, to make sure that there are no disruptions to global trade, regional trade, and also to ensure that jobs are kept intact.
And of course, Beijing watching this very closely. What are some of their concerns over this case?
So it's important to note that this is not just a business deal that has gone south. It includes major players like the U.S. and China, because it's a point of contention between these two powers as they seek greater influence over such a major trading route. Now, Hutchison's two ports are strategically located along the canal. It's been operating there since 1997, and more than 40% of U.S. container traffic transits that route. So the U.S. views Hutchison's ports as a security risk for the canal operations, and Trump had also earlier said he wanted to retake control of that strategic waterway, and U.S. authorities even going so far as to say that the court's decision was actually a win for America. Now, it's important to note that while the U.S. had paid for the construction of the canal, it had handed, and they actually ran operations there for close to a century, it actually transferred control to Panama in 1999. And so Panama has been in control of it ever since. Now, the U.S.'s narrative about security risks did not sit right with Beijing. Of course, we're hearing statements coming out of China side saying that it will safeguard the legitimate rights and interests of Chinese enterprises. Chinese Foreign Affairs Ministry also said today during a press conference that U.S.'s remarks about national security, was akin to Cold War mentality, and that also was undermining international law. We're also hearing from Beijing's office overseeing Hong Kong affairs. They've gone out to slam the court's decision, saying that the ruling was legally groundless and ridiculous, and that China would never bow to hegemonism. Ateli.
Deborah Wong in Shenzhen, many thanks for that report. A Japanese Prime Minister Sanae Takaichi is riding a youth-led wave of popularity ahead of Sunday's snap election, where she has connected with younger voters where her predecessors fell short. Clips of Ms. Takaichi playing drums with South Korea's president, if you recall, and taking selfies with Italy's Prime Minister, widely shared on social media. And the items Ms. Takaichi used, such as her handbag and a pink pen, have sold out after going viral online. Now, a survey by public broadcaster NHK right after Ms. Takaichi took office put her approval rating at 77% among 18 to 39-year-olds. Well, that's head and shoulders above similar polls for her predecessors, reversing a downward trend since 2021. Well, CNA's senior correspondent Michio Ishida is here to join us live from Tokyo. So, Mitch, tell us what exactly is behind the strong support among the young voters for Ms. Takaichi?
Well, in December, major daily Sankei Shimbun and Fuji TV conducted a survey, and they reported that Takaichi cabinet's public approval rating was 75.9%. That's huge, and they gave a breakdown based on the age group, and let me give you the breakdown. Okay. Now, support was the strongest among those between 18 and 29, or 92.4%. Sankei and Fuji actually tend to show higher approval rating for the LDP compared to other major media. Now, Takaichi cabinet's approval rating based on their latest survey is still 70.8%, so that is still high. And NHK, Japan's public broadcaster's latest poll suggests 58% from a peak in November of 66%. And based on the survey, at the highest point, 77% of those between 18 and 39 supported Ms. Takaichi and her cabinet. Now, TBS TV presented an analysis of why young people support the Takaichi cabinet. One is Takaichi's exposure on YouTube. You open the site, her campaign speech pops up. Some have gained 3 million views. She has 2.6 million followers on X and tend to post her views on X first. And she even has so-called Sanae Maniac. Her handbag, the pen she uses, seems popular. And actually, a relative told me a ballpoint pen maker came around selling its pen as used by Ms. Takaichi. Now, regarding contentious policies, the reduction or lifting of sales tax was thought as opposition parties' main platform. But Ms. Takaichi decided she wanted to reduce sales tax slapped on food items for 2 years, crossing out sales tax from the list of disputed issues with opposition parties. So that analyst saw as an interesting strategy she's taken. She has not mentioned much about sales tax during her campaign, nor has she spoken of controversial issues such as the restriction against espionage. She's been highlighting an aggressive spending to spur economic growth.
Oh, the fact that she has 2.6 million followers, that is pretty impressive, I have to say, Michio. But I guess the big question, if Ms. Takaichi's popularity among all these youths, is that actually going to translate into votes for her Liberal Democratic Party?
Well, based on what political watchers are saying, they're not sure. Fuji TV in a survey in late January suggested LDP's approval rating as 36%, and compare that to the Takaichi cabinet's 70.8%. There's a huge discrepancy. And to notice, 40% of electorates are undecided. So those undecided voters could be the key if they vote. And if young people vote, are they likely to vote for Ms. Takaichi or her LDP? Well, in the past 3 general elections, voter turnout among those between 18 and 19 was around 40%, and those in their 20s was around 34 to 36%. And compare that to the total turnout in the 2024 general election, which was 54%. So young people's turnout is lower than the average. And exam season for private schools overlap with the election period. Analysts think young voters will not have time to cast their ballot. And in northern Japan, they're experiencing heavy snow. A fire and disaster management agency said 35 people have died from the snow in 8 prefectures. And many residents in that area need to concentrate on clearing the snow to prevent their homes from being crushed. And transportation is being disrupted. So the severe snowstorm could discourage residents from traveling to their balloting station.
Well, let's hope the snow will clear by Sunday then. Thanks so very much for that report. CNA senior correspondent Michio Ishida in Tokyo. And the man who fatally shot former Japanese Prime Minister Shinzo Abe is appealing his life sentence. The Osaka High Court says it will be conducting the review. Tetsuya Yamagami was found guilty 2 weeks ago at Nara District Court for using a homemade gun to assassinate Mr. Abe during an outdoor campaign event in 2022. Now, Yamagami's defense counsel last month argued that the 45-year-old's, quote, tragic upbringing should be considered in deciding his term. They claimed he was a victim of religious abuse, but prosecutors say he deserved a life imprisonment for his grave act. Well, the assassination of ex-Premier Abe sent shockwaves through Japan, a country where there is virtually no gun crime. A time now for a break, but coming up on East Asia tonight, elections in Japan don't just stay in Japan. They can affect the global financial system, hitting even those who don't invest in the stock market. I'll tell you how when we return. Hello again. You're watching East Asia tonight, and you're just in time for business news with Roland Lim. So, Roland, all eyes are on Japan's election this coming Sunday, including investors all around the world. Tell us more about that.
Right, Otelia, I will. The outcome of the election and Prime Minister Takaichi's policies could materially affect global financial markets and investor portfolios. Remember, Japan is the world's 4th biggest economy and a major bond market, and shifts in fiscal direction will have global spillover effects. Japan's election is sending shockwaves through the entire global financial system. Now, even if you don't invest in Japanese assets, you're still likely to be affected. Here's why. Japan is not just another economy, it is one of the world's biggest lenders, a major holder of foreign assets, and the backbone of a huge amount of global investing. Now, for decades, Japan has quietly funded markets everywhere from the US to Europe and Asia. So when Japan wobbles, the world feels it. The stress began on the 19th of January when Prime Minister Sanae Takaichi called for a snap election. She promised large tax cuts and more government spending without saying how she would pay for them. Now, this matters because Japan already has the highest government debt in the developed world. At the same time, the main opposition party also promised permanent tax cuts. Now, investors suddenly realized that no matter who wins, spending will go up and fiscal discipline goes down. The reaction was brutal. A day after the election was called, Japan's bond market saw a historic sell-off. A long-term government debt bond yields jumped sharply in a single day, moves not seen in decades. Now, this means investors now see a higher risk in lending money to the Japanese government and want to see higher returns. In other words, Japan will pay more interest on its debt. A government estimate shows that annual interest payments could surge more than 50% to $104 billion in the fiscal year 2028. But the story doesn't end in Japan. U.S. government bond yields jumped too. European and emerging market bonds sold off. Stocks turned shaky. So why does this spread so fast? Now, one big reason is something called the yen carry trade. Now, for years, investors borrowed cheap Japanese yen because interest rates were near zero and used that money to invest in higher return assets overseas. This quietly supported markets around the world. Now that Japanese interest rates are rising and the yen is strengthening, that trade is breaking. Investors are being forced to sell foreign assets and buy yen to repay loans. And that means synchronized selling across global markets. There's another risk that's even bigger. Japanese investors, pensions, insurers, and banks hold about $5 trillion in overseas assets. Now, even if a small part of that money is brought home because Japanese bonds now pay higher yields, it could flood global markets with selling pressure. Of particular concern is that Japan holds over $1 trillion in U.S. treasuries, which is the world's pricing anchor. Now, a Japan-driven sell-off of U.S. bonds is bad news for everyone since rising yields drive up interest rates for mortgages, credit cards, and just about any other consumer loan. And for more on this, let's bring in Seijiro Takashita. He is Professor of Management and Information at the University of Shizuoka. Professor Takashita, thank you for joining us here. The yen carry trade that I just mentioned, it's been unwinding since 2024 when the Bank of Japan ended zero interest rate. How much risk is there still ahead given the election uncertainties?
Well, a lot of speculative selling has basically already taken place. At least that's the market's guesstimate, but we still do have a large amount of cross-border yen borrowing, as you noted. And especially with the, again, as you just reported, Takaichi-san going for a very strong fiscal policy, and Bank of Japan possibly continue, or at least the speculation that it will continue to tighten the policy while the Fed is going to cut rates. Obviously, that brings out a lot of anxiety amongst the investors, and thus it's becoming a big problem as we speak right now.
Here's a scenario. What would a 5 to, say, 10% repatriation of Japanese overseas assets mean for the U.S. markets?
It would mean, of course, a negative implication, but, it could also interpret it as some bubbles going away. My question would be, what would prompt, the Japanese investor to repatriate in the first place? It's basically seeing a very long-term sustainable, I would say, interest rate rise in Japan, which I doubt will be the case, and accommodated by strong yen, which we don't see any of that scenario coming up right now, or vast improvement to be seen in Japan's financial, public finances, which again is not going to happen overnight. So obviously, we could see some of the repatriation, but I don't see the Japanese overseas asset basically, being repatriated as we speak right away.
At the same time, do you see Japan realistically funding these tax cuts without actually damaging confidence in its debt load?
That's a very good question because, that's a really tricky one. Of course, we do have, the highest record high tax revenue, and I think this is where, Ms. Takaichi is aiming for. Unlike the mistakes that were made by, European Central Bank, by going for austerity measures, she is basically going for the growth expansion measures, which I think is a right methodology. But, this is one worry because, well, using revenue surpluses might be one thing, but I think cutting expenditure might be pretty difficult. And from that point of view, I think this is probably the trickiest part that, the current government basically have to play with.
And where is the role of the Bank of Japan in all of this? I mean, it's likely to be a very, tightrope, really, with them trying to protect the yen or trying to protect the bond market at the same time.
Well, I don't think Bank of Japan has a deep pocket like most people think. Their current assets, current account is reaching well over 600 trillion yen. But that said, I think Bank of Japan would continue to basically normalize its rate. Let's not forget that, the past 20 years have been quite obscure. So what they're trying to do is normalize the rates. And I think, this negativity about Japan's I would say fiscal condition, people constantly talking about the excessively high level of debt. In my opinion, it really isn't seeing the picture, because what you should be looking at is not only the debt, but much more to do with net debt to GDP, which includes the financial assets by the Japanese. And if you look at that, our debt to GDP or net debt to GDP goes down to about 100 to 130%. Again, this is one of the things that, I'm not saying that we should sit down on a couch and not worry about this, but, I think the market is only looking at the very negative side of the balance sheet.
Another tool in the policymakers' toolbox is currency intervention. Do you think a coordinated currency intervention could actually stabilize the yen or just buy time?
Basically the latter. Single intervention has absolutely no meaning. And joint intervention may, have some effect, but as we all know, it can't beat the market powers. But it does have a very good, strong, I would say, weapon, and that is the verbal intervention. And by that, you can basically, move, or I should say, solidify the direction of the market to a certain degree. And I think, Bank of Japan have been very bad at this, but I think they've learned in the past, I would say, a decade or so, in utilizing, this verbal intervention, which I think they'll be using it as a strong tool from here onwards.
By that extension, does this also end Japan as the world's cheapest source of money?
Not necessarily. Again, I don't think, Bank of Japan has a luxury of continuously raising the rates because, well, our economy isn't as strong as many people might think. It is recovering, but our inflation is cost push inflation. It's not demand pull inflation like in the United States. But that said, of course, weakening the yen is hurting us, especially considering that we import virtually, for example, 99% of oil, and the food that you were reporting earlier, for example, on a calorie basis, we only have 38% self-sufficient rate. So obviously, this weakening the yen has to be halted. But that doesn't mean that Bank of Japan has a luxury or the deep pocket to continuously say, to basically announce the continuous rate rise. I don't think that will be the case. I think that's very unrealistic.
Professor Takeshita, we'll have to leave it there. Thank you for your analysis. That was Seijiro Takeshita, Professor of Management and Information at the University of Shizuoka. And I'll have more business news for you a little later on. Otelli.
All right, looking forward to that. Thanks so much for now, Roland. Well, coming up on East Asia tonight. A look into the demise of Jiewo, a major trading platform that has left China's private gold hub on edge. And what a military pact between China's no-limit ally Russia and Myanmar could mean for Beijing. This is East Asia Tonight, and here are the headlines we're following. CK Hutchison launches international arbitration against Panama after the country's top court avoided the Hong Kong operator's rights to operate ports in the vital waterway. The gunman who fatally shot former Japanese leader Shinzo Abe appeals his life sentence. The review will be conducted by the Osaka High Court. And Japanese Prime Minister Sanae Takaichi rides a youth-led popularity wave as she seeks a decisive mandate to push through her spending plan for the economy. Well, this Sunday's midwinter election takes place amid intense, record-breaking snowfall across large parts of Japan. At least 35 people have died and nearly 300 others injured from weather-related accidents. Parts of Japan have been experiencing what experts are calling disaster-level snowfall in recent days, with authorities today warning of possible avalanches in northern regions. And the highest death toll was recorded in Niigata Prefecture, with 12 fatalities. The northern city of Aomori, also among areas hardest hit, recorded its highest January snowfalls in decades. Ms. Takaichi's government has rolled out disaster response measures. Troops have also been deployed to help clear the roads across the northern and western regions. Residents are advised to take caution and stay updated with the weather forecast. Now, Mayu Yoshida is tracking developments for CNA from Tokyo, and she tells us the potential impact adverse weather could have on the polls.
First of all, the timing of this election, at least for voters, is not ideal. Last time Japan held an election, general election in February was 36 years ago, because the winter weather is really becoming a real problem. In northern parts of the country, conditions are simply too snowy and too dangerous for some people to get to the polling stations. And we're already seeing the impact because in some snowy prefectures, early voting turnout is down by around 20 to 30%. There's also an administrative issue because for local governments, February is one of the most busiest months of the year because they prepare budgets and review policies ahead of the new business year, which actually starts in April here in Japan. And because of that, election preparations have been rushed. And in fact, ballots still haven't arrived in many households here. And at my home, this party pamphlet arrived just today. We were only having 4 days until the election, and it even includes this notice that says that ballots are being delayed and voters can actually show up and vote without bringing their ballots. And that's something that I've never seen in a campaign pamphlet before. So the big question is how this turnout could affect the LDP. Historically, lower voter turnout has favored the LDP, but that was when it was partnering with Komeito, which reliably mobilized voters regardless of the weather or the timing. This time the picture is less clear, because lower turnout could actually work against the LDP if younger voters who are actually big supporters of the Prime Minister decide not to brave the weather. So whether the weather backfires or not is still an open question.
Now, the collapse of a gold trading platform triggered rare protests in China's tech hub, Shenzhen, last month. The downfall of Jitters highlights the growing risks in shadow markets that have gained traction amid volatile global precious metal prices. And here's a look at what unfolded and what is at stake.
Shuibei in Shenzhen is one of China's largest jewelry and gold wholesale hubs. Dubbed China Jewelry Capital, it has been under the spotlight since mid-January. This follows allegations that a trading company based at Shuibei had defaulted on hundreds of millions of yuan in payments to customers who traded gold and other precious metals on its platform. Videos shared by victims showed protesters gathered on the streets outside the Shuibei market demanding payments, and tense exchanges between security personnel and victims at the front desk of Jitters office at Shuibei. CNA understands that victims came from across China. They're estimated to reach to tens of thousands, judging by the volume of users queuing for payouts on Jitters' trading platform since mid-January, when payment issues first emerged. We spoke by phone with a victim in her 30s, based in neighboring Fujian province. She said she and her husband had put in hundreds of thousands of yuan at Jitters through 2 separate transactions. She now fears the money is as good as gone. She said that while her husband deposited his gold at Jitters as a form of investment, she only wanted to make a new gold bracelet, taking advantage of a gold exchange promotion by the platform ahead of the Spring Festival, a period when Chinese households typically buy gold jewelry. Her story is similar to those shared by other victims. She said she chanced upon Jitters' promotion on Chinese social media platform Xiaohongshu and was impressed by the positive reviews shared by other Xiaohongshu users. She then introduced Jitters to her husband. Forward contracts have been common among companies at Shuibei as wholesalers seek to lock in prices, manage volatility, and secure supply. But with gold and silver prices shooting through the roof over the past year, such arrangements have increasingly been extended to retail investors, allowing short-term transactions that function much like futures but with extremely low entry thresholds and no regulatory oversight. The local government of Luohu, where the Shuibei market is located, said it has set up a task force to work with Jitters management to raise funds and begin processing payments. Reports said victims were offered deals that include steep haircuts in exchange for waiving criminal proceedings against the company.
Russia and Myanmar have signed a 5-year military pact, which analysts say is crucial to helping the military in Myanmar solidify its grip on power. Now, Russia's defense ministry says the agreement will last until 2030. The Kremlin's top security official, Sergei Shoigu, visited Myanmar this week, and he reportedly told military leaders that they have Russia's backing, including on the global stage. Myanmar state media also confirmed the deal, calling it an enhancement of defense cooperation, but gave few details. Now, Myanmar's military is reliant on Russia and neighboring China to keep its armed forces stocked. The army snatched power in a 2021 coup, triggering a civil war. Well, analysts say that the relationship between Russia and Myanmar is built on 4 areas: diplomatic backing, defense cooperation, energy ties, and tourism. Myanmar's generals are internationally isolated, so it sees Moscow as a key ally. Well, Russian weapons have been used in Myanmar's civil war, and amid worsening power shortages, the Asian nation has turned to Moscow for discounted oil. Experts say both countries have also sought to expand trade, while Myanmar is keen to attract more Russian tourists. The pact with Russia comes as Myanmar completes a month-long election, which the military has touted as a return to democracy. Critics, though, have called the polls a sham. But earlier we spoke with Damien Kingsbury, an expert specializing in political and security issues. And he tells us how China will likely react to this new military alliance between its no-limit ally Russia and its neighbor Myanmar.
I think at this stage, Russia and China are probably happy to work together to supply weapons to the junta in Myanmar. Certainly, they both have been the major suppliers to date. And that hasn't caused any difficulty. So I don't see that this new arrangement will create any further problems between China and Russia. Of course, if Russia was to consolidate its position in Myanmar and was to become the dominant external influence, then China might have more concern, given that it does see Myanmar as being in its backyard. It's fair to say, though, that China is probably backing both sides in this conflict. It doesn't really care who wins, so long as whoever does win remains a client of China. Russia will be keen to retain Myanmar as a customer, but perhaps not so much for its strategic influence.
Now, the last U.S.-Russia nuclear arms control treaty, known as New START, is due to expire tomorrow. And ahead of the deadline, the Kremlin says the looming absence of nuclear arms limits would be very bad for global security. But it also rejects the inclusion of Beijing in any future agreements, a key issue Washington has insisted on.
Russian President Vladimir Putin has proposed that the two sides stick to existing warhead limits for 1 more year to buy time to work out what comes next. On Tuesday, Kremlin spokesperson Dmitry Peskov warned that time was running out.
Впервые Соединенные Штаты и Российская Федерация — это 2 страны, которые обладают крупнейшими в мире ядерными арсеналами, останутся без основополагающего документа, который ограничивал бы и вводил контроль за этими арсеналами. Мы считаем, что это очень плохо. Это очень плохо для безопасности во всем мире, для стратегической безопасности. За оставшиеся дни наше предложение остается на повестке дня.
U.S. President Donald Trump has not formally responded to Putin's offer. He said in January that if it expires, and that the treaty should be replaced with a better one. New START was signed in 2010 by U.S. President Barack Obama and Dmitry Medvedev, an ally of Vladimir Putin who served a single term as Russia's president. It set limits on strategic nuclear weapons, the kind that each side would use to strike the opponent's vital political, military, and industrial centers in the event of a nuclear war. The number of deployed strategic warheads was capped at 1,550 on each side, with no more than 700 deployed ground or submarine launch missiles and bomber planes, and 800 launchers. The treaty text says it can only be extended once, and it already was in 2021 under former U.S. President Joe Biden. Now it's expiring, leading to Putin's push for a year-long informal agreement. If Moscow and Washington cease observing mutual limits on their long-range nuclear arsenals, it will mark the end of more than half a century of constraints on these weapons.
Договоры в этой сфере – один из важнейших и ключевых инструментов контроля над вооружениями, которые, в свою очередь, созданы для обеспечения стратегической стабильности, в данном случае между Российской Федерацией и Соединенными Штатами Америки, для обеспечения и поддержания эффективного ядерного сдерживания и в то же время недопущения неконтролируемой гонки вооружений, ни каких-то особых эскалационных рисков.
Without a new agreement, each side would be free to increase its missile numbers and deploy hundreds more strategic warheads. However, experts say this poses some technical and logistical challenges and would not happen overnight. Arms control advocates are concerned about heightened nuclear risks, especially at a time of increased international tension because of wars in Ukraine and the Middle East. For the U.S., a key concern is China's growing arsenal. It now has an estimated 600 warheads, but the Pentagon estimates it will have more than 1,000 by 2030. Trump says he wants to pursue denuclearization with both Russia and China, but Beijing says it is unreasonable to expect it to join disarmament talks with two countries whose arsenals are far larger. Russia says the nuclear forces of NATO members Britain and France should also be up for negotiation, which those countries reject. Also, experts say a successor treaty would probably need to address other classes of nuclear weapons.
Coming up in East Asia tonight, China's stock surge in January pulling in a wave of momentum, traders pushing new investor accounts to their highest level in months. Plus, a brutal week for Bitcoin erases nearly $500 billion from crypto markets, hit by falling tech stocks and weakening precious metals. Well, glad to see you back with us in East Asia tonight. As promised, Roland Lim is back with the business news. And Roland, so one forward-looking indicator that's pointing to a stronger growth is China's services sector. Help us understand what's behind the pickup.
Yeah, the new orders looking more positive despite businesses being jittery about the global outlook. China's services sector grew at its fastest pace in 3 months, supported by stronger new orders and a pickup in hiring. The latest rating dog services PMI showed activity remaining in expansion territory and edging higher to 52.3 in January from 52 the month before. Now, companies who responded to the private sector survey cited a stronger increase in new businesses and cost pressures easing at the start of the year. Greater China markets managing to recover after a weak start. Mainland solar companies and onshore banks extending gains. Shanghai Composite closing out the day 0.85 in the green. Shenzhen up by 0.2. Hang Seng Index also marginally higher, easing concerns over broad value-added tax on internet-related sectors helped sentiment. China recording a renewed surge in retail investor activity. The number of new account openings rising to 4.9 million in January, according to data from Shanghai's stock exchange. It's a high not seen since October of 2024, and that's when Chinese policymakers came up with stimulus measures that sparked the biggest equities rally in decades. This time around, activity in artificial intelligence-related shares is drawing a renewed rush for retail investors. The influx drawing regulatory scrutiny as stock turnover on mainland bourses and benchmark indices reaching unprecedented levels. Officials so far have enacted measures including tightening margin requirements and urging a sovereign wealth fund known to be China's national team to offload shares in a bid to cool financial markets. The move also widely seen to be partly aimed at avoiding a repeat of the 2024 volatility, which left many small investors exposed. Japan's services activity growing at its quickest pace in nearly a year, marking its 10th consecutive month of sustained growth. S&P Global Services PMI rising to 53.7 in January. That's a marked increase from 51.6 in December. Remember, reading above the 50 mark indicates expansion in the sector. Strong foreign demand for Japanese services largely helping to drive growth in the private sector. Employment for services also continuing to rise, albeit at a slower pace than in December of 25. But while business confidence for the next 12 months remains upbeat, S&P notes that some firms remain worried about the global economic outlook, labor shortages, and older demographics. Nintendo shares plunging around 11% despite reporting robust sales, investors fretting about momentum for its flagship Switch 2 game console amid an expected rise in memory costs. The Kyoto-based company reporting strong Switch 2 sales during the year-end shopping season, but the system is seen as lacking blockbuster titles to sustain demand. Nintendo is also facing pressure from a shortage of memory chips, a key console component, which has driven prices up. Its shares are down more than 15% so far this year. Shares of the world's largest jeweler, Pandora, tumbling, more than 9% after analysts warned it could struggle amid sharp swings in silver prices. Now, silver climbed above $90 an ounce for a second straight session. It is currently at $89.79. And that's as sentiment in the metals market rebounded after a historic sell-off that wiped out about 40% of its value in just 2 days alone. Still, prices remain nearly 3 times higher than they were a year ago, having a direct impact on Pandora's profitability expectations. Now, Jefferies estimate higher silver costs could lead to a roughly 60% downgrade to its 2027 earnings. Fragility in crypto trading back in focus with a Bitcoin-led sell-off, wiping nearly $500 billion off the crypto markets in less than a week. The world's biggest cryptocurrency hitting a 15-month low in the US before gaining some ground today. The digital coin has fallen about 13% so far this year and is trading 39% from its record last October. Now, while Bitcoin is notoriously volatile, cryptocurrencies have been weighed down by fresh concerns over the AI trade and a sell-off in precious metals. Even as precious metals found buyers after recent losses, cryptocurrencies failed to attract support. Now, Bitcoin's fall is fueling skepticism over its role as digital gold. This week, Michael Burry of the Big Short fame warned that Bitcoin has proven to be a purely speculative asset, failing to establish itself as a hedge akin to precious metals. Wall Street's AI jitters spilling into Asia fears that artificial intelligence will replace software and related tools, gripping technology companies following an overnight loss on Wall Street. Japanese software firms leading the declines. TIS, that's a leading IT services provider and systems integrator, plunging over 15%. Trend Micro and NS Solutions declining more than 7%. A Chinese software company sold off as well. Shares of Kingdee International Software plunging 12%, while Tencent fell more than 3%. Alibaba lost over 1%, and Baidu was down over 2%. The sell-off sparked by AI developer Anthropic's updated chatbot release last week that heightened fears of AI-driven disruption. Meantime, NVIDIA's CEO Jensen Huang attempted to allay those fears, saying that concerns are misguided and that AI will continue to rely on existing software rather than rebuild basic tools from scratch.
Now, software stocks have become increasingly vulnerable to new AI-related developments, and many investors have trimmed their exposure in recent months as concerns over AI-related risks to the sector have grown. So here to tell us more, Roland. Now, we certainly know it's been a choppy week for Asian tech stocks. Are we looking at a broad sell-off here?
No, it's more targeted. It's rather uneven. It's not a uniform Asian tech route per se, but we've seen Chinese tech giants taken a hard hit from policy jitters. We've also seen Asia chip and gear makers. They have been swinging because of the AI momentum and sentiment in the US. So today, for example, as I just reported, there's also caution ahead of AI stocks.
Okay, so help us understand this. If it's not Asia tech broadly, what is it then? Where is it most obvious?
Yeah, well, Monday was brutal for AI stocks. I mean, South Korea's Kospi index, that cratered 5.3%, and that also had a knock-on effect to the other big major Asian markets because of that vibe. And then Tuesday, well, there was a flip side to that because of the US-India trade deal. The Kospi bounced back about 5%, and the Nikkei went up 3%. Nifty 50 in India, that went up 3 to 5% as well. So it's really, riding the wave, as it were. And today we saw another pullback, and we had like chip names that you know of, Advantest, Japan, Tokyo Electron, and even South Korea's SK Hynix all falling.
So what exactly would you say is driving these swings? Is it still that narrative that it's an AI bubble?
Yeah, it's two things, the two big AI fears. One is the capital expenditure doubts. Big tech keeps screaming the headlines to its investors that, AI spending will not pay off anytime soon. And that reads to investors that margins will be squeezed and that returns will be lagging. And then, of course, the other big worry is, of course, AI disruption. So AI eating into data, eating into software, eating into even white-collar jobs. So that is the fear, and that has spooked the US-European markets, and that has had a knock-on effect here in Asia.
Mm-hmm. And China, what about China? China's been a sore spot as well? Yeah,
but China, that was actually about policy fears. That was a tax fear. There were rumors that Beijing would actually implement increases in value-added taxes when it comes to the internet-related sectors, as it had just done so for the telecom sector. So they were worried, businesses were worried about that. The Hong Kong's Hang Seng Tech Index, that fell or slumped 20% from its October high in just one day alone. So that officially moved the Hang Seng Tech Index into bear market territory. And heavyweight counters like Tencent, Alibaba, Baidu, Kuaishou, they're all 3 to 6% lower because of this news. So this was purely a policy fear rather than the fact that its earnings season is coming up and that it won't be profitable.
And so beyond China, though, which other names are telling us more about the Asian tech story?
Well, the big two would be Japan and Korea. They are the clearest examples. In Japan, even today, we are seeing chip gear makers and testing equipment makers. They're under pressure because of their exposure. Advantest is down for the session, and that tends to be a bellwether for how AI investment is going. The other, of course, is SoftBank, Japan's SoftBank, because it is a huge global tech investor. So it's always in the conversation because whenever people talk about AI valuation, whether it's overvalued, whether there's need for AI funding, SoftBank is there. And then, of course, the flip side to that is South Korea. Its two biggest chip makers, high bandwidth memory chip makers, are also bellwether for AI stocks because they supply to the likes of all the AI makers in the US. So people like SK Hynix, Samsung Electronics, these are also stocks that need to be watched.
Okay, so very quickly before we wrap up the bulletin, takeaway for our viewers, some reminders you have for them?
Well, we want to see clarity in terms of whether Chinese policymakers will actually raise that value-added tax for the internet sector. That's going to be a big deal. And of course, the direction in which US tech companies will take. So whether there's going to be a spillover effect from Wall Street. And if that happens, say, for example, tonight on Wall Street, tech shares falls again, you can be sure tomorrow AI counters here in Asia are also going to fall.
Okay, well understood. Thank you so much for that, Roland. Well, on that note, it is time to wrap up Wednesday's edition of East Asia Tonight.
And don't forget, headlines anytime on CNA.Asia+. We're on Facebook and YouTube.
Have a good evening.